So in this video, I will show you an example using a stock called as MOIL. And by the way, this is 19th of April 2024. So this is more than 3 months old data, as you know. As per the SEBI regulations and guidelines, I am only required to provide education using data which is at least 3 months old. So just wanted to make that disclaimer before I start uh, talking about the stock in this video. Okay, so this is old data and I'm using this stock just as an example to educate you. Okay, so the first thing I do when I look at a base is I draw the base. Now, if you don't know how to draw this base, you can go to YouTube in the search bar, write my name Rohit Musale, write base color after my name. You will find a video and you will learn how to draw this color shaded base. This video is very important. Please take notes while you are watching this video because I'm going to share some nuances of the base. Okay, how to look at price inside the base. So if you look at this candle, the low of this candle is 259.50. The low of this candle is 260.05. So this is the lowest point in the base. So after we draw the base, we draw the path inside the base. So this is point 1. This is point 2. That's point 3, point 4, point 5, and point 6. Correct? So there are 6 points in the base. We go from highest to lowest to highest to lowest to highest to lowest. As you can see, there are 6 points in the base. So point number 5 becomes our buy point. Point number 5 is the high of this candle, which is 345.70. I have drawn the yellow line at that point. Okay, so that's our buy point. So first thing, we have to draw the base. Second, we have to draw the points in the base. There should be minimum 4 points in the base. The more, the better. Then we draw the buy point, which is the yellow line. Above the yellow line, we draw another yellow line, which is 1% above the previous yellow line. And that yellow band becomes our buying range. Between those two yellow lines, we have to buy the stock. Okay, that is our system. That is how uh, I approach trade execution. Now, take notes. This is very important. The yellow line could be in one of the 3 zones. Now, what are these 3 zones? The green zone is the top quarter of the base, the blue zone is the second quarter, and the red zone is the bottom half of the base. The yellow line could either be in the green zone or the blue zone or the red zone. Now, this is what I use as a guideline. If the yellow line is in the red zone, I am not taking the trade. Okay, because there is too much overhead supply. If the yellow line is in the blue zone, I need minimum 6 points in the base. Okay, because I want that price contraction, volume contraction to happen. Because when I'm buying from the blue zone, it is more riskier than buying from the green zone. Okay, so when yellow line is in the blue zone, I need minimum 6 points in the base. When the yellow line is in the green zone, I am okay with 4 points in the base because it is very near to the 52-week high or the all-time high. Okay, so I'm more comfortable buying from the green zone. So let me repeat: yellow line in the red zone, I'm not interested in the stock. Yellow line in the blue zone, I need minimum 6 points in the base. I need that contraction to happen so that the retail supply is at the lowest. Even if there is overhead supply, even small amount of demand could push the price up. So I need contraction. The more the better, but minimum 6 points are required. And if the yellow line is in the green zone, I'm okay with 4 points in the base. And by the way, this is applicable to any stock, is irrespective of a stock, irrespective of the market conditions. Okay, this is universally applicable across all bases, no matter what the quality of the base. Okay, applicable to every base. So green zone, blue zone, red zone. Now another important point to notice: what about the closing price? Okay, there is just before the breakout, or when you measure the base points, there is closing price, right? So in this case, it is 328.65. Does it not make sense to check where is the closing price, whether it is in the green zone, blue zone, or the red zone? Now, I would tell you what I prefer. I prefer both the gray line, gray dotted line is the closing price. I prefer both the yellow line and the gray line to be inside the green zone. Okay, that's like icing on the cake. That represents tightness on the right side inside the base. If the yellow line is in the blue zone, okay, I want the gray line or the closing price to be in the blue zone. So again, that represents tightness. If both the lines, the yellow line and the gray line, if both are in the same color zone, right, that would represent tightness, correct? So I want that gray line to be in the blue zone if yellow line is in the blue zone. Why I am saying this is because sometimes what happens is there are 4 points in the base, the yellow line is somewhere here, and the gray line is in the red zone. So for the stock to break out, first you have to come out of the red zone, clearing that supply. Then you have to reach the buy point, and then you have to start going up from there, trying to tackle the overhead supply. It is too asking too much from a stock. So if the yellow line is in the blue zone and the gray line, which is the closing price, is in the red zone, oh, I'll be skeptical about the stock. I will wait. I will give the stock some time. I will give the stock some time to consolidate on the right side. I would not like to jump into the stock. So it is very important to see both the lines, the yellow line and the gray line, in which color they are. Okay, I prefer both of them to be in the upper half at least. I mean, no red zone, please. Okay, I am not interested in that stock. Okay, so coming back to the summary, I want the gray line to be in the upper half of the base. If the yellow line is in the blue zone, I want the gray line to be in the blue zone. If the yellow line is in the green zone, I want the gray line to be in the green zone. Now, in this case, this is unique because yellow line is in green and gray line is in blue. Now, this is still okay. I mean, there's no problem with this because this is like icing on the cake. The buy point is in the green zone and there are 6 points in the base. That's like icing on the cake. All I'm saying is that if I take this trade, it is slightly more riskier than if both the lines were in the green zone. That's what I'm saying. I'm not saying I will not take the trade. I am saying that if I take the trade, I will be aware that it is slightly more riskier. You understand what I'm saying? I look at everything from the lens of a risk manager. Okay, preferably both of them should be in the green zone. If one of them is in green and one of them is in blue, then the slightly higher risk doesn't mean that I will not take the trade. Okay, now look what happens after this base. I will move the price forward, and by the way, again, just to mention, as per SEBI regulations, this is older data. This is April 2024. We are in February 2025. So I'm moving this price forward till May. Look how the breakout worked. This is fantastic price action, by the way. And it continued to form another base, very short base, and then shot up. Okay. It was a very powerful base. So the tighter the price action on the right side, the more powerful is going to be the base. You see from here, the yellow line, the stock shot up like 60% in what? 3 weeks, maybe a month. Okay. Again, this is 18th of May 2024. So this is very old data that I'm using just to illustrate the point that you have to focus on three things. Okay. Number one, where is the yellow line? In which zone is the yellow line? Number two, where is the closing price? In which zone is the closing price? And number three, how many points in the base? Okay. If you focus on these three things, you will become very good at identifying a proper, nicely formed, tight base. Normally, what traders or beginners do is they use a lot of indicators like MACD, histogram, then stochastics, RSI, then something called as squeeze. I heard one of my students talk about squeeze indicator. I don't know what that is, but I also heard someone talk about the momentum indicator. Well, these are all lagging indicators. I want you to focus on the price. Okay, if you put too many indicators on the chart, you will get confused. Just look at the price. There are only three moving averages here, and that too We really don't need those moving averages. Just one glance at them, you know that it's a stage two stock. Obviously, it is going to have high relative strength and good industry group rank if it's a decent performing stock. Okay. So just three moving averages, just as a guideline, just to make sure that we are in a confirmed stage two uptrending stock and the volume. That's it. You don't need anything else more than this on the chart. Okay. It was a nice breakout. I would have preferred if both the closing price and the yellow line would have been in the green zone. But you see, both the prices are in the top half of the base. You will come across a lot of bases where you have a nice buy point, yellow line in the blue zone, but the closing price is in the red zone. Be aware of that. Okay, those that's the nuance that I wanted to discuss here. And by the way, the gray dotted line is always going to be below the yellow line, the buy point, because we want to buy a stock that is moving up. So these are the nuances of the base which I wanted to discuss with you. Hope this helps. If you have any questions, please let me know. And again, a disclaimer, I am properly following SEBI guidelines, and very soon I will be applying for the SEBI registered, sorry, SEBI research analyst certification. Okay, I will be appearing for the NISM exam soon. Thank you so much.